President Trump has repeatedly attacked Federal Reserve Chair Jerome Powell for not cutting interest rates, even threatening to fire him. Powell, speaking Friday at Jackson Hole, says the Fed is watching how Trump's tariffs affect the economy and inflation. Trump wants lower rates to boost growth and reduce government debt costs, and has also criticized Powell over a $2.5 billion Fed building renovation. Firing the Fed chair would threaten the central bank's independence, long respected by economists and Wall Street. The White House is increasing pressure on the Federal Reserve, with President Trump announcing plans to fire Governor Lisa Cook. Trump has also criticized Fed Chair Jerome Powell this year for not cutting interest rates and has publicly speculated about removing him. Experts warn that politicizing the Fed could lead to higher inflation, rising rates, and a loss of confidence in the U.S. financial system. Cook denies any wrongdoing and says she will fight her removal. The Federal Reserve has huge influence over the U.S. economy. By cutting short-term interest rates, it can make borrowing cheaper, boost spending, and encourage growth and hiring. Raising rates, on the other hand, slows the economy and can lead to job losses. Economists favor an independent Fed because it can make tough decisions, like raising rates to fight inflation, even if it makes loans for homes, cars, or appliances more expensive. The importance of an independent Fed became clear after the high inflation of the 1970s and early 1980s. Former Fed Chair Arthur Burns was blamed for letting inflation worsen under pressure from President Nixon to keep rates low before the 1972 election. In 1979, Paul Volcker became Fed Chair and raised short-term rates to nearly 20%, causing a sharp recession and unemployment near 11%. Despite the pain, Volcker's tough actions eventually brought inflation down, showing why economists value a Fed that can act independently. Investors are watching closely. Earlier this year, President Trump heavily criticized Fed Chair Jerome Powell, calling for lower interest rates to prevent an economic slowdown. Some Wall Street analysts see Trump's move against Governor Lisa Cook as another attempt to influence monetary policy. Economists warn that a legal battle over Cook's removal could drag the Fed into a political fight, shaking confidence in its independence and sending markets on edge. Trying to fire Fed Chair Powell could send stocks down and push bond yields higher, raising borrowing costs for mortgages, car loans, and credit cards. Investors prefer an independent Fed because it usually controls inflation better and makes predictable decisions. If politics swayed the Fed, markets would struggle to anticipate or understand its actions, increasing uncertainty across the economy. Analysts warn that cutting interest rates too soon or removing the Fed chair could cause long-term problems. Loss of Fed credibility might lead to higher inflation and borrowing costs for mortgages, loans, and credit cards, while also raising everyday living expenses. A politicized Fed could shake global investor confidence in the U.S., destabilize markets, and threaten the credibility of the dollar, setting a risky precedent of a central bank that bends under political pressure. Could the president fire Powell before his term ends? The Fed faces growing pressure amid an uncertain U.S. policy landscape, especially around trade. Analysts say Powell's best strategy is to stay steady, even as Trump pushes for lower rates to boost the economy. Powell has insisted the Fed will not yield to political pressure and cannot be removed by the president. He also emphasized the central bank will not rush rate cuts, preferring to wait for more clarity before adjusting policy. The Supreme Court has indicated that a president cannot fire the Fed chair just for disagreeing with policy, though removal for cause is possible, usually requiring misconduct or negligence. Analysts say this may explain why the Trump administration has focused on the Fed building renovation as a potential pretext. Powell would likely fight any removal, which could end up back at the Supreme Court. The Fed has kept its benchmark rate at 4.25%, 4.50% this year amid persistent inflation and uncertainty over tariffs and growth. Last fall, it eased rates by a full percentage point. Analysts say the possibility of a Supreme Court case over whether Trump can fire Powell is adding to market unease, testing the long-held assumption that the Fed operates independently. The Fed's independence doesn't mean it's unaccountable. 4 of the current 7 Fed members, Powell, Cook, Philip Jefferson, and Michael Barr, were appointed by President Biden. Cook's term ends in 2038, but Trump may try to replace her sooner with his nominee, Stephen Miron, pending Senate approval. Powell's term as Fed chair expires in May 2026. Even replacing the chair doesn't guarantee policy changes, since 12 committee members vote on interest rates. Congress sets the Fed's goals, including the 1977 dual mandate to maintain stable prices around 2% inflation and maximum employment. The Fed chair must testify to Congress twice a year on economic and rate policy. Inflationary risks of a compromised Fed. Economists stress that central bank independence is key to fighting inflation. Allowing politicians to control the money supply often leads to overspending and higher prices. While the Fed can temporarily lower rates by buying government bonds, this extra money can push inflation higher over time. Inflation is hard to control, and the Fed must balance stimulating growth without fueling rising prices, a constant challenge for policymakers. U.S. credibility undermined. Removing Powell could weaken confidence in U.S. assets as safe havens for global investors. Experts warn that a politicized Fed and unpredictable policies could make the dollar and Treasury bonds less reliable, forcing foreign investors to demand higher returns. Powell has noted that continued uncertainty could reduce U.S. investment appeal. While U.S. assets remain a global benchmark, experts caution that politicizing the central bank could erode their perceived safety.